Good morning, everybody. I'm delighted to be here to speak to you this morning. It's great to be here at a time when the economy has grown so strongly. It seems like we're back on an even keel. Let's hope now that we can actually build on that and get the economy functioning at its capacity. And I suppose part of that capacity is really a sustainable construction sector. And I suppose the seeing you all here this morning is sort of really to show that effectively you have a big part to play in contributing to that, because there is a huge demand in the economy for both housing and commercial development. And I suppose in terms of my presentation here this morning, I just really want to talk to you about probably 3 or 4 things in particular. First of all is talk maybe about our core objectives, what the legislation set up to do, and just really that's really very important. However, building on that, I suppose I want to talk really about the point that NAMA is available to provide development finance, and we have substantial firepower available in our balance sheet to be able to do that, and I'll talk to you about that. I suppose there is the whole issue of the wider social and economic contribution, and we play our part in that as much as we can. And I suppose the final bit, I just wrap up with a bit, is about Construction 2020. I think is a hugely important document. The 75 initiatives in it. I think it's really only the start, and it really has to be built on. And I think it's important for any project that it has a good start. And once you have that, you can certainly see how it can be developed to give it more, I suppose, bring construction really back to its potential in the economy. As Michael has said there earlier on, 25% of the economy was really never sustainable in terms of construction. But I suppose really if we got back towards 10 to 12%, it certainly would be very welcome and would have wider contribution in terms of employment and economic development of the state. I suppose in terms of getting back to the core objective, really at the end of the day, when we bought the 74 billion euros worth of loans to the banks, we paid them 32 billion euros. But 30 billion of that 32 billion euros really was a contingent liability to the state, which basically means that the government guaranteed the NAMA bonds that we give the banks in return. And obviously the banks have brought those bonds over time to the ECB to get money, because obviously they'd lost a huge amount of liquidity post September 2008, as was building up before that. So our job really is to pay off those bonds as quickly as possible. And I suppose the recent review of NAMA by the Minister for Finance basically said that he wants 80% of that senior debt or contingent liability repaid by the end of 2016. And I suppose while at the end of 2014, we're more than confident we'll get to 50%. As of this morning, we're at 14.5 billion of the 15 billion has been repaid, and we're very confident we get there by the 15 billion by the end of the year. But we have to get to 24 billion repaid, which is 80% by the end of 2016, and we're well on target to that on that front, thankfully. What does that mean in terms of the wider economy and how we're perceived? I suppose in terms of Ireland really, I suppose from 2008 onwards, along with my colleagues in the NTMA, and Michael was with us for a while there, was that really Ireland was a bad news story. Everybody was dumping on Ireland, it was all Ireland's own fault. At the end of the day, we got severely downgraded by the credit rating agencies. Had a huge amount of interaction with them in terms of trying to convince them, that okay, this had happened, but we could come out of it. And I suppose the Moody's really were the last rating agency to bring Ireland back to investment grade, and that was hugely important, because if you're not having investment grade government bonds, then certain funds in the world who naturally would buy Irish government bonds could not hold them, because their investment committees or credit committees wouldn't allow that. So that was hugely important. And I suppose as part of that, I suppose it was nice to hear that effectively us getting rid of the contingent liability, paying off our debt a lot quicker than expected, was a key part in their decision to upgrade Ireland. Obviously then Standard & Poor's again, at the start had said that the NAM assets were worth zero. The 32 billion we paid to the banks, they said it was worth zero. Don't give any credit to Ireland until we get any money back. They've turned that around now and said, listen, the fact that we've generated so much cash that we're paying our part and paying down the debt, and they brought us up to the equivalent of an A rating, which is hugely important in terms of attracting the investment pool and having a very an improving credit rating at a time when interest rates are quite low. And you look at Ireland's 10-year government bond rate, and it's about 30 to 50 basis points better than Spain and Italy. that's really saying something that Ireland really has played its part in terms of helping itself out of this very difficult situation. These are the bond redemptions in terms of NAMA, obviously 50% by the end of the year, 80% by 2016, and 100% really by 2018. That's the trajectory that we have to work to, and we're very confident that we'll actually get there, obviously based on current conditions. This is a very interesting slide because people always keep saying, oh, you know, NAMA sold all its an Irish portfolio, you know, it's in all the wrong places, you know, there's nothing left that's any good. So this slide really is, we've extended it out, changed it around from the last time you might have seen it, is showing where the remaining portfolio is at the 30th of June. So if you look here really, towards the end of it really, 65% of our remaining portfolio is Dublin based. Almost 10% is Cork, 5.2% is Kildare, 4% is Galway, 2%, almost 2.5% Meath, over 2%, and an average between Limerick and Wicklow. And I'm glad to see Kerry is not letting down the side there, holding up at 1%, but that must be the weight of Sam Maguire. But so therefore, when you look at the rest of where the portfolio is really, you know, that's a huge convincer to people when you're actually able to say to them, you know, never mind this, you know, fairy tale story that we don't have assets, we have all assets in all rural locations, coast estates and things like that. We certainly do have in the portfolio, but they're a very small element of the portfolio. But just really to show you that we're very confident in terms of NAMA's future, given where the assets are based, given where the prices are improving, you know, we'll pay off all our debt and generate a surplus. I suppose the big news really here is today, and I stick it out here, is that Michael talks about the firepower available from Bank of Ireland. But I'm here to tell you this morning that NAMA has 4 billion of firepower available for the construction industry. If we can find viable projects. These are internal generated resources. We already, since the start, 1 billion has been drawn down, but we have another 3 billion available. That's very important, really, in terms of effectively we can fund the projects if they're viable. They will be clearly, you know, directed at so the key areas. One is Grade A office space. If there's demand for Grade A office space and it's commercially viable, we would fund it. And of course, the big focus of that will be on the SDZ here in Dublin. But we're not necessarily ruling out anywhere else as well if it proves to be viable. Residential development, hugely important, huge issue about demand and supply. We are through our debtors and receivers will fund delivery of 4,500 units by the end of 2016. Every single day we're looking at new projects. There's a bit of confidence come back into the industry, come back to our debtors. At the end of the day, if the proposals, bring them into us. If it works, we will fund you. That's my message to you today. We are ready and willing and able to do that. I suppose Construction 2020 really has to be about looking beyond the near term. You have to get going. But we're also looking in terms of across our portfolio. We've got 3 senior planning officers now recruited within NAMA. We're looking at every single site within NAMA across the country, and we're looking at that. We believe at this stage we've identified sites where we're going to work with through the local authorities, and obviously the Minister, in terms of here this morning, I'm delighted to hear in terms of initiatives that he's trying to pursue, is that we believe that there's potential in the sites within NAMA's portfolio that could deliver 20,000 extra homes on top of the 4,500. Crucially important in terms of the Irish economy and where we are today. And I suppose, as I said again, this is not just Dublin based. If it works commercially, works for us. The only thing the legislation that NAMA has to do is that it has to stand up commercially. If it stands up commercially, we can fund it. If it doesn't stand up commercially, we can't fund it. So, that's very important. But it's not exclusively Dublin. So if some of you are NAMA debtors and you've projects elsewhere in Ireland and you can convince us this work, we will fund them. Obviously, the SDZ, NAMA has got a crucial role in terms of this. We got 75% of undeveloped land in the SDZ and Dublin Docklands as security for NAMA loans. There was certain, we've gone to the board in September. We got a detailed business plan. We got that business plan approved by the board. Of the 13 sites in the SDZ, 4 of them will be, developed with joint venture partners, which we've chosen already. And the other 9 are under detailed consideration at present, and we'll be progressing those along, and I'll talk about those in a moment. As I said, we've tiered the sites between Tier 1 and Tier 3 2. Tier 1 are the ones really where we're really stepping up in terms of going for planning approval. Now the SDZ is in place, and we would see work starting in some case in terms of demolition and remediation, and then that effectively that the building would start on some of these sites in Q1 2016 once we get through Dublin City Council. As I said, 4 sites, which was minority interest, we've put them into qualified investment funds with joint venture partners. Everybody knows who they are: Oaktree and Kennedy Wilson. We've got 2 sites which are key in terms of kick-starting development here. One is Boland's Mill, where effectively a planning application will be going into Dublin City Council probably at the end of this month. And that's a substantial development site, and that's a huge amount of work gone into the background in preparation for that. And the second one at the moment is that we've a request for interest in terms of a long-term leasehold on the North Wall Quay next to the famous old Anglo building on the new central bank headquarters, whatever you want to call it, and that should be concluded as well, probably by late November, and we would see that again moving forward very quickly. I suppose overall what it means is that there's an exposure to 3.4 million square foot of commercial space and about 1,900 residential properties within the SDZ, and we believe that we're quite happy for NAMA to fund a whole lot. We're quite happy to do it with joint venture partners if the right opportunity comes along. And I suppose on the back of that, as part of the SDZ, infrastructure is crucially important. As part of the SDZ, there's probably 2 new bridges required. We've already got board approval that we've offered Dublin City Council that will fund one of those bridges. It makes absolute sense for us to link the North and South Quays even more than what they are at present. I suppose the biggest deficit that's been here since my time in NAMA has been effectively everybody's been quoting loads of figures, but there's actually been no empirical knowledge of what the actual number of houses is, how many people are actually in the country, how many people are going to be there in the future. So we funded, along with the Irish Bank Federation, the ESRI research into the housing market. And that's been very interesting and really sort of saying that effectively the ESRI have come back and they've sort of said based on the census 2011 and projecting forward in terms of net population increase, because Ireland is one of those countries that does have a net population increase, that there's demand on average about 25,000 units all the way out to 2030. And there's sort of 3 scenarios. There's 19,000, which is I think is the worst case scenario, 25,000, which is the central case. And even if the population keeps going at the rate it's going, it could be up to maybe 30,000 units per annum. But listen, if it's somewhere between 20 and 30, I think we'll all be happy in this room in terms of the demand that's there, and it can be funded. And it also, crucially important, has identified as part of that research where they think the housing will be needed. And that is obviously, as well, that if you're in terms of making a sustainable business case to your private equity partner, or to your bank like Bank of Ireland or AIB or Ulster Bank, whoever the case would be, or to NAMA, effectively means then that actually you're not building in places that you actually don't need supply, which is crucial. This is a very interesting chart, one that pulled out for you really, because as you know, we bought properties from the banks by loans from the banks by reference to November 2009. But if you look at the way the property values have recovered in Dublin, we're only about 8% of where they were in November 2009 at this stage. And obviously, given the majority of our portfolio in Dublin, that is most welcome. But outside of Dublin, when we looked at a number using the CSO data, and this is outside of Dublin, nationally ex-Dublin, still around 25%. That's quite interesting, really, because everybody thinks that house prices are recovering very quickly, but it certainly is very much limited to urban conurbations. So I think, obviously as the economy improves, you would hope other parts of the country will improve, but I think there's certainly going to be a time lag effect, and I think any viewers, would see that very much locally on the ground, because it's based on a lot of factors such as demand and population and immigration, and obviously in terms of employment. Again, one of the things being looked at here is they were sort of saying, why wasn't, one of the really recent criticisms from the same people who said that there was 300,000 too many units in the country 2 years ago have no problem now turning around and saying listen, NAMA should be funding the building of units back in 2010, 2012, because everybody could see this happening. The reality is that under legislation we couldn't do that because effectively commercially it didn't stand up at a time, as you see from the previous graph, when prices were dropping rapidly. But I suppose the interesting thing here is that, you know, the cost of construction has remained pretty stable over that period, as most of you would know. But however, it's only now that the actual trajectory of sales prices is beginning to actually pass through that line, allowing for a reasonable developer profit. So I think once we pass through that line, I think, you know, prices don't really have to increase that much, but it certainly makes it more sensible and easier for people to get senior debt. But also, probably, as Michael said here, the banks really, you know, aren't going to give you 100% senior debt. But if you're trying to get, you know, private equity, you really need the prices to improve somewhat to actually make it sustainable, so that equity piece can be funded. In terms of ourselves, I suppose in Construction 2020, we've committed to delivering 4,500, which we call shovel ready, by the end of 2016. Probably over 1,000 will be delivered by the end of this year, over 2,500 by the end of next year, and 4,500 by the end of 2016, and well on target through working with our debtors receivers to do that. And I suppose after that then is the 25,000 tier 2 and tier 3 sites, and tier 2 ones are which have actually, you know, planning issues. That to be the more discussion with local authorities in terms of trying to convince them that, you know, there's lots of issues around there about development levies, about infrastructure. Some of these can be solved quite quickly. Obviously delighted here this morning that the review of Part 5 is completed, and the quicker that is brought around, so everybody has certainty, the better for everybody. So that will really be a nice thing to have. But certainly in some local authorities, I've been saying this to local authorities myself, the whole issue of development levies really has to be faced up to. You know, it really is very costly in some areas to do that in terms of building. And obviously there's some tier 3 sites which are, you know, longer term potential, but they certainly have to be looked at. If you're talking about Construction 2020, you're supposed to not talk about near-term planning, even more longer-term planning, and they have to be worked on now, you know, so that we can actually see what the future housing can be delivered. It's quite interesting, even this graph is out to date really, and this morning, it's JLL this morning just said that it is a very strong Q3, and things is that the investment market in Ireland has passed 3 billion already up to the 30th of September this year. And in 2006, the peak of it was just over about, I think JLL was saying, somewhere between 3 and 3.6 billion. I predict that the investment market this year will hit 4 billion because effectively we've seen a huge amount of demand in the market, huge amount of capital still wants to deploy in a very low and obviously negative interest rate environment. You know, property is a natural investment for these funds who are trying to get access to real assets. I suppose in terms of NAMA itself, we have lots of, you know, we've really ramped up the sales in the Irish market, but up to into 2012, when property prices were falling, as you've seen there in the previous graphs, we deliberately had sort of a whole strategy. We didn't force too much of sales in the Irish market on the basis that we could take the income in the meantime and you know, let yields compress down on very good assets from, you know, 8 to 8.5% back towards more reasonable levels, you know, 5 to 6%. And certainly in the grade A space, we certainly will have seen transactions there this year, as you'll be aware of, where they would have traded at some at 4%, but some, you know, 4.5%. I suppose I would be a bit cautious really of saying that the yield should go anywhere below 4%, but I suppose that's a reflection of demand in very specific areas for very specific product which is limited, which has to be addressed. These are some of the portfolios we put onto the market starting at this time last year. The Platinum portfolio was the first one, went on the market, really got the office market moving, I believe. Some of the other ones that we've done recently, the Acorn shopping centre portfolios, went very well. The Orange Collection, the residential development, and obviously the Project Venue in terms of regional hotels. I suppose that's what has been done, and I suppose the big question is what are we going to do? And I can say to you here this morning that we've already our planning done for the whole of 2015 at this date. We were 95% sure of every single asset that's going to be sold in 2015, and we're starting the planning into 2016 as well, because we have to think ahead in terms of trying to achieve the government's objectives. But what is coming really down the line, and this is part of our state objective, that we'll say that there'll be at least 250 million euros worth of product come to the market each quarter. And these 4 portfolios, which we're currently refining, will be about 600 million worth of product we're going to be bringing on between now and the end of the year. There will be 2 portfolio Dublin offices, one of which would include the second half of Grand Canal Square. There's a retail portfolio consisting of 5 regional shopping centres, and I suppose that's been the most surprising feature really here, is that there's demand for regional shopping centres portfolios now from international buyers. There's a residential development again, about 600 apartments in 7 areas across Dublin, again where there's huge demand. And there'll be a hotels portfolio, which I thought I was going to save to announce to you this morning, but Jack Fagan got there before me. I suspect how he got the information, but sure, there you go. That'll be a number of regional hotels, and they'll be refined over the next few weeks, but they'll be launched at the market between now and the end of the year. So again, it's very important to give a pipeline of product to potential buyers, that they know what's coming. But effectively, that's on the horizon. The loan sales market, really, Ireland's been at the vanguard of this in terms of this. We've been leading forward. I think I might have said it in the conference here before, is that the loan sales market was very undeveloped in Europe when we started off on this. Very developed in the US. We had a number of loan sale portfolios in the US. You said you're going to put them on the market today, and the loan sales agents will say to you they'll complete in 6 or 7 weeks' time, and it would go bang, 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 bang. It would completely work that way. We tried to replicate that here in terms of NAMA. We got stuck into a loan sales panel, and it has worked very well. And I suppose now Ireland is seen as being one of the most developed loan sales markets in Europe, and we were 22% of all European loan sales in the first half of the year. And critically important when we're competing with other countries who are deleveraging, that we're seen to run a very good process which keeps the investors interested. Obviously, these are some of the portfolio, some of the offices in terms of FDI investment, where effectively again we funded the completion of these, and FDI working with the IDA, we mind to find very good tenants for these, which make them very marketable. I suppose in terms of the economic aspects of NAMA, so this people forget this, is that across our 800 debtors or so, things like this, that is about 15,000 jobs supported in trade and business by NAMA since 2010. Businesses that might have got the support if they actually stayed with the banks. We, I suppose, in terms of annual rent abatements, we've obviously published, as part of the Minister announced in Budget 2012, a guidance note, and that has led to 20 million in annual rent abatements, mainly for the retail tenants. Through examinerships and other things which we've supported, is the result in 40 million long-term lease restructures. These have helped the economy and businesses when they were in a very difficult state. And I suppose within NAMA, and certainly through various initiatives there, is that we try to support as much job retention as is feasibly possible. So 2 recent examples of that was Elvery's with 700 jobs and Powerscourt with 300 jobs, and delighted to be able to do that in sometimes very difficult circumstances. Social housing, in terms of NAMA, NAMA is not responsible for housing policy. NAMA is not responsible for delivering social housing, but I suppose we have played our part working with our debtors receivers to make units available, where effectively we funded the completion of a number of developments and made over almost 5,500 units available to the housing agency and local authorities. About 2,100 demand has been confirmed, and over 1,000 of them will be delivered at the end of this year, and the other up to 2,100 will be delivered by the end of next year. A sort of a very important feature in terms of, I suppose, in terms of wider socio-economic role, but effectively, we are certainly playing our part to deal with this, and certainly a very serious issue that needs to be addressed. In terms of some examples of these, if you look here in terms of the tannery in Bannon, County Cork, that was a picture of it. We're just in a lease with NABCO this week before we did a long-term lease, and this is when it's completed. It makes spectacular change in terms of in terms of both the local area, but also in terms of the people who live there in a very nice housing development. Baldial in Dublin, we've got some leases with Tua, and obviously here in Blarney and Cork again. a total different perspective from what social housing is, or what people thought traditionally social housing was. It certainly is, a very nice product, and we believe it has to be a very nice product because people have to live there. We often get, hear this thing about unfinished estates, and they're all over the country, and every single one is in NAMA and things of the day. The reality is not. There's about 217 of the 1,200 unfinished estates which are related to NAMA debtors receivers. This is a map showing the concentration of where they are, and I suppose the biggest concentration really is in the following counties: Cork, Galway, Kerry, Kilkenny, Limerick, Tipperary and Waterford. And in most of the places it's generally one or two. So really, every one of these we're going to address. We sort of decided, listen, it has to be dealt with. There's no other way out of it, and we're quite happy to fund it. We've expended about €5 million to date in terms of the ones that we remediated through working local authority, get site resolution plans, and we will basically continue to spend money to remedy these wherever possible. And very few of these estates will now result in demolition, which is most welcome, unless it's a very serious health and safety issue where the local authority deems that it has to be demolished. I suppose, what in terms of the Construction 2020, what does it really, should it achieve? I believe it should achieve that it should have a construction sector that is strong, that has professionals, well managed, and I suppose construction property companies that can withstand downturns. If you look at some of the major construction companies, when the downturn happened in 2008, 2009, they went and they tapped up their investors and got access to equity because they were listed in that. That is certainly something that is needed in terms of a vibrant and sustainable construction sector, and something that should be actively encouraged by the CIF. The market needs to respond better to supply and demand signals. It needs to be able to be, proactive rather than reactive. So effectively, the signals went haywire during the last decade. That's why the whole issue about research, we started it with the ESRI. We believe that should continue. It's very important. I believe it's something that the CIF really needs to promote to continue. We also need banks that fund development properly. The banks have been severely burned in terms of the losses they incurred. But effectively, in any sustainable economy, the banks have to play a full part in that. And delighted here this morning that Michael, in terms of Bank of Ireland, have saying that they're ready and willing to do that. NAMA is not the long-term solution, never meant to be. We'll play our part, but the reality is that once the economy recovers, gets back of it, I'm sure it'll be very sad to hear, but NAMA will fade out of the limelight. But the banks need to get back in to fulfil that role. And I suppose there's going to be alternative sources of funding. It's not going to be a traditional bank funding. There's going to be private equity. And I suppose one of the things that I think has to be welcomed, and it shouldn't be something that should be seen as bad, international capital. That is no harm. Most open economy. We're quite happy to welcome the multinational that comes to the town, brings 500 jobs over the case of the day. We should be quite happy to accept the FDI element of international capital on the basis that you can champion yourself and partner with these people. Because the reality is that at the end of the day, they want to make money, and if you can show them you can make money, that makes sense for everybody. So believe me, they will stick with you if you can help them to make money. And there's obviously quite interesting really is that there's been a lot of domestic capital which we thought was all latent, which is in buying assets as well, and they certainly might necessarily have the expertise, but are looking to deploy capital in a low interest rate environment, and that's something that really can be taken advantage of. The planning development system, it needs to be more responsive, it needs to be proactive, it needs to be ahead of the curve in terms of what is needed, where and when, and what it can do to facilitate development. I think there's a huge focus on that in Construction 2020, and we had a recent planning conference with the county managers and city managers and the heads of planning, and effectively very positive response, but in terms of trying to explain to them, nobody's trying to game you. This is about doing things properly. Nobody wants to recreate the problems that happened before, but effectively you have to work with us. There's no point being bureaucratic for the sake of being bureaucratic. Let's get it right, and let's try and streamline it to work well together. And I suppose the final part really is that, NAMA, I'm saying here this morning, we've $1 billion committed, with $3 more billion available, cash in the balance sheet to put into projects. If you want to work with us, we will work with you. we will provide that capital. You know, the economy is beginning to turn around. It's very important that the economy is turning around. We can play an important part. And I think, you know, the issue is whatever's happened before has happened before. What we need is a partnership approach. We need to work together in the interests of the economy. Thank you very much, ladies and gentlemen.